I'm Darrell Schwandt with Key Mortgage Experts. I'm licensed in Colorado, Tennessee, and Florida. So don't let my UW shirt throw you off. I just got off the phone with a first-time homebuyer, and they asked me a question that is very common for first-time homebuyers. What is the difference between an FHA and a conventional loan? FHA loans are generally used by people that have credit issues either now or in the past. If you have a credit score above 700, then I'm going to guide you into a conventional loan. If your credit score is below 700, I usually guide you into an FHA loan. But what is the difference? First things first, FHA always has a lower interest rate than a conventional loan. That is because FHA loans always have mortgage insurance, so banks have less risk, which allows them to give you a better rate. Mortgage insurance says if you default on the loan and stop making payments, the bank won't lose any money. With FHA, it doesn't matter how much you put down. You'll always have mortgage insurance for the life of the loan. The mortgage insurance is the same percentage no matter how much you put down. With FHA, there are two types of mortgage insurance. One is monthly, and it's part of your monthly mortgage payment. If you have a loan amount of $500,000, then your monthly MI would be $229 per month. But you also have UFMIP, which stands for Upfront Mortgage Insurance Premium. For the same loan amount, FHA will charge you $8,750 on the day of closing. But not to worry, FHA knows you don't have an extra $8,750 sitting around, so they'll let you finance it into your loan. But make no mistake, you will pay for it over time. The UFMIP is why FHA is like borrowing from the mob. It's a one-time fee to do business with them, and it ain't cheap. But if you have a low credit score, it's usually your only option to get into a home. As a reference, you can have a score as low as 560 and still buy a home with FHA, whereas conventional stops at 620. Now, FHA has two credit requirements. Your score has to be above 560, and your credit needs to be mostly clean for the past 12 months. You're allowed one late payment. On a conventional loan, mortgage insurance is based on two main factors: how much you're putting down and what is your credit score. As a rule of thumb, if your credit score is in the 600s, then the mortgage insurance will be more than an FHA loan. So credit score is king. With a good credit score, you can get the benefits of a better loan. FHA allows you to put as little as 3.5% down, and most down payment assistance programs work with FHA loans. Conventional loans allow you to put as little as 3% down. Conventional loans are more forgiving on property conditions, whereas FHA is strict. FHA is tough on condos. They actually have a list of condos that are approved. So if you're not on the list, you didn't make it. Now, conventional looks at condos just on a case-by-case basis. On any home it finances, FHA does not allow holes in the screens or drywall, mold, ripped or torn carpet, no peeling paint, and positive drainage. Now, conventional loans, they don't care that much about the condition, but they still have some requirements, like you have to have a railing on the stairs. Now, as I said earlier, FHA has a lower rate compared to a conventional loan by about a half a point. FHA is easier with gifts from a relative, but conventional makes it easier for the donors. Most first-time homebuyers are surprised to find that they qualify for more than what they thought. So getting approved is always the first step. Over the past 25 years, I've thought first-time homebuyers are both the toughest loans to get done and the most rewarding. Even if you're not a first-time homebuyer, realize it's easier to have a phone conversation and allow a good loan officer to guide you through the process versus guessing at what will work for you. I'm really good with loan programs, understanding the numbers, and helping others decide on the best course of action. So if you're looking to buy or refinance, contact me if you want something better. I'm Darrell Schwandt with Key Mortgage Experts, and I look forward to hearing from you.